Hey guys, welcome to 2026. Thanks for joining me. Um, hey, don't forget if you have any questions or anything to put them in the comments. I've got the comments up on my screen. I'll reply as I see them come in. If you have any questions or anything you want to talk about, hope you're having a good New Year. Hope you had a good New Year, good safe New Year's Eve, and looking forward to 2026. So today I'm going to be talking a little bit about some speculation as to what 2026 might look like for real estate investing, primarily multifamily investing, and just kind of how we should orient ourselves, what we should focus on, what we might see, what we might expect. I have a video I want to show you later on from Ken McElroy, who kind of gives his prediction for 2026. And I think it's pretty good. It's pretty high level, kind of more for larger operators. But I think there's a lot of good things in there, just principles wise, and that even apply to some of us who are maybe buying smaller properties, maybe fourplexes, eightplexes, things like that, getting into our first investment. Things that to just warn us that, not to jump into anything too hastily and things like that. I think that 2026 could have a lot of good opportunities, especially in more larger urban areas. That's usually where the corrections and things happen quickest and are the most dramatic. So if you live in any areas like that, then definitely keep your eye out for some good deals. So what's likely going to happen, in my opinion, is that in 2022, 21, 22, people took out a lot of low interest rate debt, and they were banking on on cash flow increasing, so that in the 3 years when they needed to refinance, that they increased net income would be able to cover the increase in their loan, because the rates went way up from 21, 22 to now. They doubled, more than doubled even. So they're looking at a huge reset in their mortgage payment, especially on large properties, but even on small properties. And a lot of these owners are going to end up being forced to sell or put money in out of their pocket because the lender is going to require it, or whoever the equity partner is. This is going to affect all kinds of things like syndications as well. So if people didn't buy properly and they bought at the top of the market with the low interest rates but for a high price, they have these massive loans, they will feel a lot of pain in 2026 because rents are at best flat and falling in many cities. And part of that is due to, I was just reading the other day a stat that 60% of the rent increase was due to immigration. And so we're probably going to see some of that go down, especially in these urban areas that have a lot of immigrants and had a lot of immigrants. Obviously there's fewer people, there's going to be less demand. A lot of the demand was driven by immigrant populations. And so that means that in 26, most likely rents are going to drop, which are going to give the owners less net operating income, obviously. So they're not going to be able to refinance their loans because they're expecting them to go up so much, the rents up so much. And so it just opens up an opportunity for those of us who are looking to buy. Now, it's not going to happen right away in 26, or maybe halfway through. We're probably talking more towards the end of 26 because it's going to have to, the screws are going to have to be tightened pretty tight for people to start lowering way down their asking prices, and for them to get pressured by their bank, and for them to consider selling at a loss or a strong discount to what they're currently listed at. So I would say, as I've been talking about in my buy or burn videos where we analyze properties, you really need to be able to analyze the operating memorandum, and you really need to prevent yourself from being sucked into pro formas, because these pro formas always over exaggerate what the performance of the property is going to be. And this is a bad thing in 2026 because they always think, the rents can go up 10 or 20%. So then you're going to make all this money. Well, and I've been warning you guys about this and saying, nope, just go off of what the actual numbers are right this moment. That's what you really want to go off of. Okay. Because you don't know what's going to happen in the future. And if rents stay stable, then this property makes sense. You don't want to bank on buying a property that the rents and hoping that the rents can go up. You want it to be able to pay for it 100% financed right now with the current rents. And then if the rents can go up and if the interest rates do go down, then that's all benefit for you, but we're not going to speculate and buy based on speculation like that. That's what these people who are going to be getting underwater now have been doing. They were speculating, hoping to make huge net worth gains as the rents went up, and then they were going to sell now. But now it's not working out for them, so there's going to be big losses coming for them. So, like I always say, be really cautious with the pro formas, with agents and brokers that are telling you, this is how good this thing is going to be. This is how much more rent you could make. This is how much better you could operate it than the current operator, right? Why would you be able to operate it better than the current operator? That doesn't really make much sense. So you need to just be realistic about these things. And if the property is overpriced, then it's overpriced. And we don't move on to something else. And if people tell you that your expectations are too idealistic and too high, then they just don't really know what they're talking about, because this is how you get a deal that doesn't get you screwed over in the long term. You need to make sure that the current rents are paying and will fund and finance this thing 100%, hopefully with even a little bit of cash flow, so that you can put that away for repairs that are inevitably going to happen. But you also want to make sure that you're getting debt that's hopefully long-term locked in debt. And then you can refinance that later. But this is what's really getting these people into problems. And just like 2007 and 2008, it was the interest rate adjustment. It was because they had low interest rates and the rates went up. And when it came time for the rate adjustment, they were underwater. They couldn't afford it. The payment was too high. So this happened to tons of people who had bought multiple properties, second homes and stuff like that. And so they all went under and pulled the whole thing down. Now, I don't think we're looking at anything extreme like that, but we are looking at a buying opportunity if we play our cards right and if we pay attention to what's really going on. So we can probably focus on places with growing populations, with good schools, good neighborhoods, good incomes, and all that kind of stuff. Those are going to be really stable markets, and they're probably going to be able to find a deal throughout the year. So that's what I would have you focus on. Now, in smaller markets, like let's say 100,000 or lower, there's not as much fluctuation because those are relatively stable markets. Places like Miami and stuff like those things are highly volatile, and they move rapidly and a lot. Now, in a small rural town, prices aren't going to fluctuate all that much, and they're based primarily just on the interest rate and stuff like that. So it's not as big of a deal, but we still need to be cautious and we still need to pay attention. Now, the ideal would be to get something that the buyer is underwater or distressed or has to sell. So you have yourself a motivated, or the seller, I mean. So you have a motivated seller, and that there's some kind of value add still for you. That's what that's like the ideal scenario. So that's what we'll be looking for in 2026. If you guys have any deals you want me to give my opinion on, you can send them to me. My email's in the description on YouTube. If you have any comments, post comments and let me know, and I'd be happy to engage with you. I read all the comments. If you guys would like this video and subscribe, that would be fantastic. You get updated on when I go live and when I post new videos, and it helps the channel grow. If you have any comments, go ahead and drop them in on on here, and I will be happy to answer and give you my opinion. And so in 2026, I'm looking to buy. That's my goal. I'm hoping to buy. I'm hoping to find a good deal. I'm not going to overestimate what my rents will be. I think rents will stay level to drop over the next few years, especially if deportations increase as much as people are expecting them to, because immigrant populations are largely renters, and so that's going to open up a lot of apartments. There's going to be more competition going on for renters. It's going to be more of a renters market, I think, in 26 and probably